Good morning, you're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Another day, another bleak forecast for the Philippine economy. This time, the downward revision comes from the ASEAN Plus 3 Macroeconomic Research Office, or AMRO, which has cut its GDP outlook to 6.4%. From the 6.9% growth estimate it gave in March. AMRO attributes this to a resurgence in COVID-19 infections and slow vaccine rollout. On a worst-case scenario, AMRO's chief economist said a new wave of infections and reimposition of stricter lockdowns could bring Philippine growth to 5.5% or even lower at 4.5% this year. The scenario is below the government's revised target of 6 to 7% for the year. For recovery to catch up, AMRO says the vaccination drive must be ramped up. It also noted that muted state spending in the middle of the crisis could only further derail the economy's recovery. AMRO recommends that the Philippine government should boost fiscal support to minimize economic scarring and to achieve a robust recovery and more sustainable growth. Now, in terms of monetary policy, AMRO says the Bangko Sentral should keep its accommodative stance for the meantime, saying there is ample liquidity at the moment. Now, the country raised $3 billion, or around 145 billion pesos. That's from the sale of dollar-denominated bonds in a dual tranche offering. The 25-year tranche raised $2.2 billion and fetched a coupon of 3.2%, while the 10.5-year tranche generated $750 million, carrying a 1.9% coupon. National Treasurer Rosalia De Leon said, quote, heavy bias towards the 25-year offering shows that the country's credit remains attractive for investors despite the pandemic. The country will issue the bonds on July the 6th. Fresh funds raised from the bond sale will augment the national budget as the country recovers from the pandemic. This year, the government is planning to raise a total of $7 billion, or that's over 340 billion pesos from the international debt market. Okay, opening the markets this hump day, take a look at my terminal here. A little bit of pullback that's down by 0.2% to 6943.65. Basically, in the past few days, we've been trading sideways in quite a thin range. Let's take a look at which ones are dragging the index down and keeping it from breaking through that 7,000 coveted levels. We've got SM Prime here, one of our biggest heavyweights, down by 1%, followed by URC and Pure Gold. But on the upside, you've actually got another property player soaring. That's Robinson's Land, up by 1.7%, together with its sister company, RRHI, also on the leaderboard. Now, some news on the airport front. Let's take a quick peek at Macro Asia. It's in the back of news that state-owned CCCC, so that's China Communications Construction Company, has again expressed their interest in developing the Sangley Point International Airport. That's, of course, in Cavite. Earlier, recall, it had lost that deal. It was awarded to CCCC and the local partner, which was Macro Asia. Now, this from Cavite Governor John Vic Remulla. He said 4 companies have so far bought these, let's say, renewed bid documents. Apart from CCCC, you've got Metro Pacific, PIO'S, which is the Philippine Airport Ground Support Solutions, and Mossveld Law Office. Now, recall that the deal had been awarded but was terminated in January due to deficiencies in the submission of requirements. It is still, however, unclear whether CCCC will be partnering with Macro Asia should they, of course, decide to submit that offer. Now, quick peek on the mining space and how they're opening this morning. A little bit on the upside, but not too much, up by 0.02%. This as reports from the MGB, the Mines and Geosciences Bureau, have said that the mining sector accounted for 0.6% of gross domestic product in 2020. Now, this from Environment Secretary Roy Simato. He says that this tally indicates how massive the contribution of the mining industry is, even amidst the pandemic, and they are happy to see that outcome, and perhaps more to come. Recall that on April 14, President Duterte lifted the ban on the new mineral agreements, saying that this order is expected to bring in 21 billion pesos in revenues. And just a quick note here that we've just gotten wind from the SEC. They have just approved an IPO plan of St. Pio's Medical Center. This is, of course, in Zambales, according to our sources. As hospital in Zambales. Of course, we don't have much information on this, but still, nevertheless, quite exciting. A new IPO is in the works and has been approved of the SEC. We will be following that story shortly. And of course, finally, the biggest news, which was yesterday's big story, RCBC receiving Sumitomo Mitsui as an investor. That triggered a circuit breaker yesterday as RCBC had rallied to a cap of 50% up. Paired gains down to 28.42% up, but nevertheless, quite an exciting play here. Investors having cheered that news. And here to chat with us more about that transaction, we do have John Thomas, or Danie Deveras. He's the Senior Executive Vice President and the Head of Strategic Initiatives and Asset Management Group of RCBC. Good morning, sir, and welcome to the broadcast.
Good morning, Danie. Thanks for having me.
Sir, very exciting news here, and it seems that investors just grabbed the opportunity to buy the shares yesterday. But tell us, how long has this deal been in the making? You kept it quite a secret, very good secret for some time.
Which was quite difficult. This deal culminated after about 2.5 years of talks.
Wow.
So this is pre-COVID. The deal happened in 3 stages. Stage 1 essentially involved a deep search by SMBC of who would be the best partner for them in the Philippines. And they wanted to look at the strategies of the different banks. And I guess they realized that our strategy was most aligned with theirs, which essentially is to continue growing our consumer book as well as our SME book without neglecting the prospects of our large corporate customer base. So once they figured it was aligned, then stage 2 kicked in, which was actually the most difficult hurdle. And that was essentially they tried to establish whether RCBC met global standards when it came to things like fraud risk management, KYC, AML, cybersecurity, which is the big issue right now. So that took another year, and only after we cleared those hurdles did we start talking about valuation and the size of the stake, etc., and how we take forward the collaboration.
Okay. Sir, impending question here. Is this just a first tranche in terms of investment, or have you discussed the opportunity for a bigger stake?
All options are open. We at RCBC are also very careful about how we allocate our capital. And so we don't want to increase capital just for the sake of having a gigantic buffer if we can't deploy, because it also impacts the investors. Too much capital in a bank brings down the ROE, which is not good for investors. So we're trying to balance the need to buffer the bank for hard times with the need to manage our capital so that it doesn't negatively impact stock market investors.
Sir, was there a need for better capitalization because of the pandemic? Or you said that this has been, ongoing even pre-pandemic, and they did want to participate in the expansion. How soon can you deploy the funds for this purpose? And how soon do you need to, let's say, give cushions to the non-performing loans, the low growth in loans for the time being?
Well, obviously the pandemic accelerated our plans to raise the capital. In 2020 and first half of 2021, we've actually booked about 11 billion in provisions to protect ourselves against COVID risk. And we think that is sufficient. We don't think we need to book additional provisions. So the capital we're raising now is in anticipation of the economy opening up again in 2022, so that our customers who need funding, who need capital next year, we're there for them. We're ready.
Sir, what is the rationale, apart from just a good investment, for a Japanese bank to be entering in the Philippines? Will there be, cross offerings of products? Are they able to expand their own footprint here? What type of synergies can we expect?
Well, the number one, there are two areas. First of all, SMBC among the big three Japanese banks is number one when it comes to consumer lending. They're also number one when it comes to digitization. And it's in those two areas that we expect to have initial and extensive collaboration activities. Having said that, at some time in the medium term, after we realize the fruits of that collaboration, then we go to other areas. The Japanese market here, maybe more complex forms of leasing, things like that. But initially, the focus will be on consumer lending and digitization.
Sir, how did you get to this valuation? 44 pesos is, of course, a hefty premium on even in a
Well,
big price.
it's a hefty premium to price, but actually it's 97% of our book value. And we've tried to explain to them that we our numbers are what they are. We don't magic them. Our provisioning is conservative, so there's no reason to mark down any of our books, and they accepted it.
Okay, excellent. Sir, you talked about digitization. There have been talks from your CEO also of your plans to apply for a digital banking license. Not there yet, but he has already said that there might be a couple of entities to spin off, and that would be separate from RCBC. Can you give us more details on this and how possible this would be anytime soon?
Well, our digitization initiatives actually are on two fronts. No, there's the improving the digitization platform for our corporate customers, and then there's the digitization platform for our unbanked, and that's what we call DiscardTech.
Yes.
On the corporate side, that will remain in the bank. What we may spin off in the future is DiscardTech by applying for a digital bank license. We're currently incubating DiscardTech, which essentially means that we're still investing. And maybe at some point when it becomes self-reliant, maybe that's the right time to apply for a license and spin it off as a separate company.
Sir, what's the rationale for doing so instead of, improving the digitization of RCBC
Okay, very,
and
very
taking
good,
away the brick and mortar?
very good question. The three biggest costs in setting up a bank are people, brick and mortar branches, and IT. And essentially, as a big bank, our IT systems are generally in a mainframe, right? It's only now that our application systems are being migrated to the cloud. But by spinning off a digital bank, you can start out by putting your core banking system in the cloud. You don't need branches, which means you don't need that many people. So the cost proposition is much better. But it's hard to have that, within a bank because we have legacy systems. So at some point, once it has scale, then it might make sense to just spin that off into a separate body.
Okay, interesting. And sir, finally, you did mention cybersecurity will be a big chunk
Yeah.
of what you will be using this funding for. Tell us, the IT spend of banks here in the Philippines has been significantly lower than the rest of our peers in Asia. How will you be catching up, and how big of capex will you be spending on this pivot?
Well, essentially, we actually have not been underspending on cybersecurity. Our cybersecurity budget is about 8% of our gross income. So that's not small. And as we have more customers, that's when the need to have more spending on cybersecurity comes into play. So as we grow, we have no choice but to continue investing in cybersecurity.
Okay, so it will grow as, of course, your assets grow, and hopefully
Exactly.
your customer base with this reach that you now have with mobile reach as well as digital reach. Thank you so much, and
Very
congratulations
welcome.
again on
Thank you
that
very much.
landmark deal. That was, of course, John Deveras, Senior Executive Vice President and Head of Strategic Initiatives and Asset Management Group of RCBC.
Thank you, Danny.
Here are other headlines we're keeping our eyes on. President Rodrigo Duterte has signed an executive order directing the government to prepare a strategy to effect a workforce recovery. EO 140 creates a National Employment Recovery Strategy, or NERS, task force, which will implement the government's plan to restore employment until 2022. This plan is anchored on the Philippine Development Plan 2017 to 2022, which seeks to create a policy environment that encourages job creation and livelihood and training opportunities, among others. The Trade Secretary will lead the NERS task force, while the Labor Secretary and TESDA Director General will act as co-chairs. Meanwhile, Malacanang says there's no need for a special Congress session to extend the validity of the Bayanihan 2 Act, which expires today. The palace explained that the remaining 9 billion pesos fund will likely be obligated for the government's ongoing campaign against COVID-19. Otherwise, palace spokesman Harry Roque assured that any unobligated funds will be returned to the treasury. The country's gross savings fell by more than a quarter last year, despite a drop in household spending. Gross national savings totaled about 4.4 trillion pesos in 2020, declining by almost 28% from 2019. The PSA explains that the lower national savings can be attributed to Filipinos having less disposable income last year compared to 2019. Gross national disposable income incurred an almost 10% drop from the almost 23 million pesos recorded 2 years ago. Non-financial corporations accounted for the highest gross saving with almost 4 trillion pesos, followed by financial corporations with 1.4 trillion pesos. On the other hand, the general government posted negative savings with just about 1 trillion pesos in that same period. And that's a first look into the business day. Today is Wednesday, June 30, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. Today, I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.